All right, welcome back. So today I want to talk to you about something that every single one of you just experienced, whether you enjoyed it or not, and that's tax season. Now, I know taxes are one of those topics where people either lean in or they just immediately want to tune out. But this year is different. There are some very real, very measurable changes happening. And if you look just at the data, not the headlines, there's actually a pretty interesting story unfolding. And here's the big idea that I want you to explore today. Are Americans, on average, paying less taxes right now? And more specifically, is this just helping the wealthy, or is it helping everyday Americans and retirees too? Because that's where I want to spend most of our time. So what actually happened this tax season, I want to start with the raw numbers because those tell a much clearer story than opinions do. And again, if you've been listening to my podcast or if you're a client of mine and you've been attending any client educational events that I end up having, you'll know where I stand politically and you'll understand that and again, if this is the first time that you're tuning in, this will be news for you. I'm registered independent. I have been since the get-go. Since I first registered to vote in when I was 18 years old, I've been registered independent. So in my opinion, I don't care about the party or the politician. I care about the policy and how that affects the pocketbooks, or in this case, the portfolios of my clients. And when the news starts getting noisy, I go to the numbers because numbers do not have emotions attached to them. Numbers tell stories. Like when I review people's taxes, as I go through that, there are certain things that jump out at me because I'm able to read behind the numbers. And so that's why I like going to the numbers because they tell, in my opinion, more accurate stories. And this tax season, according to Treasury reporting, 53 million Americans used the new or expanded tax exemptions. And so that's not a small number. That is a massive portion of the country. And here's how that breaks down. There's about 6 million people who paid no tax on tips. Roughly 21 million used overtime related deductions. And this one matters most for my audience. 30 million older Americans claimed enhanced deductions for seniors. So now pause there for a second. That last number, 30 million, is huge because what that tells us is this just isn't policy on paper. People are actually using these provisions and refunds are up. And I think that matters more than what people think. So something everyone notices immediately is going to be your refund. Now, this year, the average tax refund came in at about $3,462. That's up from about 11% last year, where it was $3,116. And if you zoom out even further, refunds are about 24% higher compared to the 4-year average before those changes. Now, I always want to be careful here because a refund does not necessarily mean that you paid less tax overall. It can mean withholding changed, credits changed, timing changed. But when you combine higher refunds with increased use of deductions and exemptions, it does strongly suggest that on average, people are keeping more of their money. And what's interesting about that, though, is even with all of that data, 7 out of 10 Americans still say that they feel like their taxes are too high. And I would definitely agree with them. I would definitely agree with them because that is not irrational at all, because taxes are one of those things where you don't feel the savings gradually, but you feel the pain immediately. If your paycheck gets hit, you feel it. If your property taxes go up, you feel it. If groceries are more expensive, you're going to associate that with overall financial pressure. So even if tax policy is shifting in your favor, it doesn't always feel like it. And that disconnect is important. So let's bring this back to where it matters most for many of my listeners here, and that's retirement. Because this is where I think the conversation has been possibly even the most misleading. A lot of people have probably heard that these tax changes only benefit the rich. But when you look at the actual usage data, that's actually not what's happening. Remember, 30 million older Americans claimed enhanced deductions. That's not CEOs. That's not hedge fund managers. That's not billionaires. That's retirees. That's people on Social Security. That's people with IRAs, with 401k withdrawals, with pensions. And here's why that matters so much, because in retirement, your tax situation becomes more sensitive, not less sensitive, because in retirement, you're managing income streams instead of earning a paycheck. You're trying to avoid unnecessary taxation on your distributions, and you're often trying to stretch a fixed income further. And so even modest tax relief can have outsized impacts. Let's simplify what's happening here. The types of tax savings showing up right now kind of fall into a few different buckets. One is going to be income-based relief, deductions tied to income sources like overtime or tips, and that's going to help working Americans directly. Two is going to be age-based relief, and that's enhanced deduction for seniors, and that's a big one for seniors. And then targeted incentives, things like tax advantages for certain types of savings or certain types of loans. It's encouraging behavior rather than just redistributing income. And here's the key takeaway. This is broad-based relief, not just narrowly targeted. And another piece of this story that doesn't get talked about very much is what's happening at the IRS. Over the past year, the IRS workforce has been reduced by about 27%. And that's a drop from roughly 102,000 employees down to about $74,000. Now, depending on your perspective, you might think that that's either good or bad, but I don't know. 7 out of 10 people, if they think that we're paying way too much in taxes, I think reducing the IRS workforce, I would say maybe 7 out of 10 people might also think that that's a good idea, or that is a good thing that's reduced. But here's what's actually happening in practice. The IRS is shifting toward more data-driven enforcement, and they're focusing audits on specific red flags like unreported income or unusually high deductions or even certain specific refundable credits. So for most people listening to this, if you're filing clean, accurate returns, it's not going to impact you much at all. But it does mean that the system is becoming more targeted, not just larger. And finally, where does the one big beautiful bill fit into all of this? And now I said this at the beginning. I don't want this necessarily to be a deep dive into the legislation itself, but we do need to connect some dots because a lot of the changes are tied to what has been referred to as the one big beautiful bill. And here's the simplest way to understand it. It's not just one tax break. It's a collection of policies that together are designed to reduce the tax burden across multiple groups. And based on the data that we're seeing so far, on average, it is resulting in lower taxes for many Americans. Not just one group, not just the wealthy, but we're talking workers, families, and importantly, even retirees. And so, love Trump or hate Trump, right now the data is showing that people are paying lower taxes. And honestly, I don't care if you love Trump or hate Trump right now. When you look at the numbers and when you look at how much money that you're paying in taxes, when you've got more money back in your pocket at the end of the day, I think that's a good thing. And whether that is because of something that Trump enacted or maybe Biden enacted or whatever politician enacted, I don't care. I don't give a rip. What I care about is the result of whatever has been enacted. And so far, this has been a positive. And why this matters for planning is because this is where I think people might miss the opportunity. Most people treat taxes as something that just kind of happens to them. You file once a year, you hope for the best, and then you just move on, right? But if you're retired or close to retiring, taxes are one of the biggest controllable variables in your retirement plan. And when tax policy changes, even slightly, it creates planning opportunities. And so, for example, should you take more or less from your IRA this year, since you're paying less taxes? Should you convert more to a Roth while rates are favorable? Should you delay certain types of income? Should you accelerate certain types of deductions? Like, these are not small decisions. And over time, they could mean potentially tens of thousands, and in some cases, even hundreds of thousands in after-tax income. And so the big picture, if we want to step back and summarize what we're seeing right now again, the 53 million Americans used new or expanded tax benefits. Refunds are up 11% year over year. 30 million seniors are actively benefiting from enhanced deductions, and up 24% over the 4-year average before those changes were enacted. And then the IRS becoming more targeted, not necessarily more aggressive overall. And yet, most people still feel the taxes are too high, which tells us something important. Perception and reality don't always match. But we talked about that. There's more than just income tax that we pay, though. There's so many more taxes. We mentioned property tax. There's sales tax. There's gasoline tax. There's all different kinds of tax that we pay. The old adage of if it moves, tax it. If it's not moving, subsidize it is kind of a real thing. And so my final thoughts is I'd like to leave you with this. We're in a period where tax policy is shifting, and in many cases, like it or not, it's actually shifting in your favor right now. But that only matters if you understand it, if you pay attention to it, and if you plan around it. And I would say, even if you don't understand it, but if you're working with a financial advisor who understands it, then that is important, because if you don't, you're leaving money on the table. And especially in retirement, that's money that you may not be able to get back. And so if you haven't looked closely at your tax situation, and not just what you paid, but why you paid it, this is a really good time to do that. And if you want help in thinking how these changes apply specifically to you, that's exactly the kind of conversation that we have every single day. And so for those of you that do, obviously I think we've had this a lot on this program. We have a 15-minute phone call that you can have with us. There should be some link that you can click on to request a 15-minute phone call with either myself or one of the advisors that we've got working with us. And so I would say that if you are wondering about your tax situation, and not just your tax situation this year, but if you want to look out into the future and you want to figure out, how can I pay the least amount of tax that I'm legally obligated to pay throughout the rest of my retirement, not just this one year? Because honestly, if you get your taxes prepared, if you see your tax preparer once a year, that's all they are. That's not a bad thing. They are a tax preparer. They're not a tax planner. And so we've seen a lot of tax planning shift to financial advisors over the past decade. And so if you're looking for more of a tax plan rather than just tax preparation, again, feel free to click on that link, ask for a 15-minute phone call with either myself or one of the many advisors that we've got here at Miller Retirement Group, and we'd be happy to help you out with that. So that's it. Again, wanted to do this really, really quick and timely, since we just got done. It is now the day after tax day. And so all of these numbers are in. So, well, at least those that filed on time. All the numbers are in for those that filed on time. So again, any questions, reach out. We always try to bring you education so that you can be empowered to live the type of retirement that you truly deserve. So that's it. Take care. We'll see you next time.